Net interest income increased by 17%, and that was because we were able to increase our customer deposit base by 15% and virtually eliminate interbank funding. The increase in customer deposit base then led to cost of funds reducing by about 140 basis points from 6.5 to 5.2 during 2016. So the combination of that and our successes in e-business also, where we were able to increase e-business revenues by over 200% in 2016. And the increase in e-business revenues is a testimony to the increased acceptance of our e-business offerings, our innovative, tailor-made product offerings to different niches of the retail segment. Currency devaluation impacted the entire banking system to the extent that almost all banks in Nigeria had foreign currency loans on their books. And when the currency devalued, it meant that the naira equivalent of those foreign currency loans suddenly increased. In Union Bank's case, from year-end 2015 to year-end 2016, our loan book grew by 38%. But when you split that into its components, devaluation accounts for 25% and pure volume growth accounted for 13%. What happened with devaluation was that, and devaluation combined with FX scarcity, meant that several companies in Nigeria were almost at the verge of shutting down their operations in the absence of FX with which to keep their operations going. So that had its effect on the ability of many borrowers in the system to service their obligations. In Union Bank's case, we have been able to maintain, we were able to minimize the impact on the NPL ratio because we only moved from an NPL ratio of 7 at the end of 2015 to 7.1 at the end of 2016. However, the impairment charge, which is the impact on the P&L, increased by about 7 billion naira. That's about a 69% increase. And you find the same thing on the P&Ls of all banks who have declared their results. But the good thing is that our NPLs are very well covered. Our coverage ratio improved to 182% in 2016. I believe it was at 177% at the end of 2015. Liquidity, we have always been above the minimum requirement of 30% in terms of liquidity ratio. In terms of capital adequacy ratio, at the December 6, 2016 extraordinary general meeting, our shareholders gave us approval to raise up to 50 billion naira in capital via a rights issue. We expect that rights issue to be launched in Q2 of this year. That will be our major capital adequacy ratio mitigation strategy. So far this year, we have seen a number of signs that suggest that the macroeconomy is on the mend. The issue of FX scarcity has improved somewhat, particularly on the retail side, where CBN has made very conscious efforts to pump money into the banking system to meet the needs of retail users. On the big ticket side, the CBN has sold FX via forward transactions to end users. Inflation, for the first time in several months, inflation actually has turned the other way, has reduced in February. Also, analysts predict that the GDP will actually show marginal recovery at 0.8% for 2017. All of this suggests that the macroeconomy is on the mend. However, Union Bank will remain cautiously optimistic. We will maintain our stringent risk acceptance criteria on the credit side. We will stick very, very religiously to our portfolio and sectoral limits. On the retail side, we will continue to introduce tailor-made, innovation-based products to the market. And these products also address our commitment to financial inclusion. Products such as Union Correct, Union Better, Union Goal. We'll continue to consolidate our efforts in the areas of cash management and transaction banking. Like I said, we will be cautiously optimistic in 2017. So we expect to grow the loan book by between 10 and 15% in 2017. We expect to grow the deposit book by between 15 and 20% in 2017. And we expect to bring our cost-income ratio to below 65% in 2017. The proceeds of the rights issue will fund the bank's growth. We will apply some of the funds to lend to selected growth sectors of the economy. But like I said, our lending will be will follow very strict, tight risk acceptance criteria. We will fund investments in technology, investments in innovation, investments in digitalization in 2017.
Union Bank, your simpler, smarter bank, celebrating 100 years of heritage and service.